So you think you know Warren Buffett's strategy? Well, it turns out it's not just a simple set of rules you can memorize. We're going to decode the real story here, how his famous philosophy was born, how it grew, and how one crucial friendship changed absolutely everything. You've heard this a million times, right? It's probably the most famous quote in the entire world of investing. But while a lot of people know the words, very few really get the deep, evolving philosophy that's behind them. This one sentence, it's the key to his entire playbook. So, what does it actually take to do that? To be greedy when everyone else is running for the hills? Is it some kind of secret formula? Well, the real answer, as we're about to find out, isn't a calculation at all. Nope, it's a story about learning, discipline, and having the guts to completely change your mind. To really understand where Buffett ended up, we have to go back to the very beginning. Back to his mentor, the legendary Benjamin Graham. Graham is basically the father of value investing, and his ideas were the absolute bedrock of Buffett's early career. Graham's big idea was this thing called value investing. And honestly, the concept is pretty simple. Buy things for less than they're actually worth. It's like being a bargain hunter, but for stocks. The whole game is just finding that gap between the price tag and the true underlying value of a business. And Graham had a very specific way of doing this. He famously called it the cigar butt strategy. And that name is just brilliant, isn't it? The idea was to find these cheap, kind of rundown companies that had just one last puff of profit left in them. The focus was all on how cheap it was on paper, not really about whether it was a good business or not. This whole approach was built on one of Graham's most important ideas, the margin of safety. You can think of it as a safety net for your investments. If you buy a company for way less than you think it's worth, you build in this huge cushion. It's a buffer that protects you if you made a mistake or just got unlucky. And this is one idea from Graham that Buffett has held onto his entire life. Okay, so Buffett is out there successfully picking up these cigar butts and making good money. But then a new character walks into the story, and he is going to change the entire game. His name is Charlie Munger. Their story kicks off at a dinner party in 1959. They just clicked instantly. A few years later, in '65, Buffett buys control of this failing textile mill called Berkshire Hathaway. But the real magic, the real transformation, starts in 1978 when Munger officially comes on board, cementing a partnership that would turn that old mill into one of the biggest companies in the world. See, Munger saw the world completely differently. He had no interest in finding a discarded cigar butt on the street. For him, the perfect investment was owning a profitable toll bridge. The goal wasn't one quick puff of profit. It was to own something amazing that just sits there and spits out cash day after day, year after year. And this toll bridge way of thinking, pushed by Munger, it lit the fuse on the single most important evolution in Warren Buffett's entire career. It was a total 180, a huge philosophical shift away from just buying cheap stuff. And this is the change right here. It's so simple, but it's incredibly profound. Graham's method was all about finding a fair business at a wonderful price. Munger flipped that completely on its head. He said it's way better to buy a wonderful business at a fair price. That little switch reoriented their entire strategy. The focus wasn't on price anymore. It was on quality. So, how do you even spot one of these wonderful businesses? Well, you look for something that Buffett and Munger call an economic moat. And the analogy is perfect. Just like a moat filled with water protects a castle from invaders, an economic moat protects a company's profits from all its competitors. So what do these moats actually look like in the real world? Well, a huge one is a powerful brand. I mean, just think about trying to launch a new soda to compete with Coca-Cola. Good luck. Or there's something called a network effect, like with Visa. The more people that accept it, the more people want the card, and on it goes. Or maybe a company just has a built-in cost advantage, like Geico, which can sell insurance cheaper than its rivals. These are the kinds of powerful, durable advantages that build those toll bridge businesses Munger was talking about. Okay, so we've got the theory down. This big shift from just cheap to high quality, all centered on finding these economic moats. But how did that new philosophy actually work with real money on the line? Let's take a look. You can really boil the new and improved strategy down to these 3 steps. First, you find that wonderful business with a big, wide moat. Step 2, you wait. You wait patiently until you can buy it at a sensible price, which often happens when everyone else is freaking out. And step 3, you hold on to it for a long time. As Buffett loves to say, Our favorite holding period is forever. The moment this new philosophy really got put to the test was the See's Candies deal back in 1972. The price was way higher than the old cigar butt Buffett would have ever dreamed of paying. But Munger pushed him, arguing that See's had this incredibly powerful brand which gave it a secret weapon, pricing power. They could raise their prices a little bit every single year, and loyal customers would just keep on buying. It was a huge lesson. A quality business is worth paying up for. But to take advantage of these rare chances, you need firepower. And this is where Buffett thinks about cash totally differently than most people. For a lot of investors, sitting on cash is a waste. For Buffett, it's financial ammunition. It's a strategic weapon you keep ready and waiting for that perfect moment when fear takes over and great companies suddenly go on sale. And here is that exact principle in explosive action. At the absolute height of the 2008 financial crisis, when the whole system looked like it was about to collapse, Buffett didn't panic. He pulled out his financial ammunition and invested a mind-boggling $5 billion into Goldman Sachs. And what was the result? A cool $3 billion in profit. That one single move perfectly sums up his entire evolved philosophy. He found a great business, Goldman Sachs, waited for maximum fear, and then he struck with conviction. It was the perfect blend of Munger's focus on quality and Graham's demand for a margin of safety. So, it's really easy to look at a story like that and think, okay, there has to be a secret formula, right? Some calculation that just tells you what to do. But that is the single biggest misunderstanding about how Warren Buffett operates. You know, I love this comment I saw on Reddit because it just cuts right through the noise. Everyone wants formula to plug in to be rich. And the thing is, there ain't no formula. And it's true. Buffett has never laid out some precise equation because one just doesn't exist. It's not about a spreadsheet. The real secret, the real sauce, isn't a method at all. It's a mindset. It's built on a commitment to learning every single day. It demands ironclad emotional discipline and patience. You have to be obsessed with the business itself, not the squiggly lines of the stock price. And maybe most importantly, you have to have the humility to evolve, to admit you are wrong, and to change your thinking. So when you boil it all down, the story we've just gone through isn't about finding a magic set of rules. It's about a journey. It's the journey from Graham's cheap cigar butts to Munger's durable toll bridges. Buffett's real genius is his incredible ability to learn, to adapt, and to grow. And that leaves us with one final thought to chew on. If Buffett's true edge is this mindset, this combination of patience, discipline, learning, and focusing on long-term quality instead of short-term bargains, where else, outside of the stock market, could that same way of thinking create incredible value in our own lives?